Good morning, ladies and gentlemen. Welcome back to another pre-market watch list today, baby. So exciting. Today's the last day in the month, so hopefully we can finish out pretty strong here. Finished out, past couple days doing pretty well. So hoping to continue that momentum going into next month. So again, we're up did pretty well this month. Hopefully that momentum can continue over into next month. So there are a few stocks we're going to watch. Not necessarily a penny stock day for me, unless some things change. Some things might change. Again, we get on her pretty early, and things always change by the time we get closer to pre-market action, or sorry, the opening bell. So again, good morning to all you guys tuning in. Thank you guys for joining in. So particularly a couple things I'm looking at today are going to follow is the market today, Chipotle, McDonald's. I'll follow a few other bigger price stocks, CRK, and there was another one. What else is there? CRK. Well, maybe it'll come to me. So let's get going. Let me share the screen to you guys. There we go. All right, so one of the first stocks we'll talk about is CRK. Now, CRK is, many of you guys are familiar. It got pumped up, had a huge gap up pre-market, popped up to a high of 785, and anyways, regardless. So it ended up dumping, and then it kind of dumped out on Friday, right? So on Thursday, it squeezed up, it came down, and then Friday it came down a little bit more. So there's for sure quite a few people that were trying to short sell this or get short on CRK or Comstock Resources. With that being said, if you look at the chart, it popped up and it dropped, but now it's just kind of gaining its a little bit of footing. It's creating higher lows. So I would say watch CRK today for a potential long, because if this thing doesn't start heading down, we might get another pop, another run, because there may have been a lot of people that were trying to get in short, thinking this thing would just crash. And if it doesn't just crash, they might start covering up and they'll cause it to start squeezing up again. So CRK, regardless, all it is a potential long bias trade today, a stock that might go long based on the fact it had a huge gap up. There was a lot of people probably trying to short sell it. And if it didn't go down, it might end up squeezing up today. So I think CRK should be on your watch for a potential long bias trade. Now we'll talk about the market. All right, so let's look at the market on a 180-day chart. I believe we're going to see a red day on the market. Why do I think we're going to see a red day on the market? Well, for one, let's look at it this way. All right, the last time, so follow my cursor here. So the last time the market went up, it stopped right here. So hold on, right? If you look right here, that's where the market stopped last time. If you draw a line across, you'll see that clearly it stopped out right at resistance and then it dumped, okay? So then the market dumped here. The market came back up, right? And now, or actually, let me rephrase that. Let me step back some. I meant to do it right here, right? Then the market dumped from here to there, and then it came all the way back up, and it stopped as it rejected off this previous level. And now it's going down. Now it's going back up, and it's most likely going to reject off that level and come right back down. So for some of you, you may have no clue what the hell I just did. So let me zoom in a little bit. All right, so looking at the chart from this point, you can clearly see from a couple days ago, from when we had that recent dump. So probably a couple days back, the market took this really big red day, right? You see on the screen this really big red day. That really big red day stopped out around 268 right there, right? Look at what's happening right now. We're stopping right at 268. So chances are we're going to see the market go like that today. Not to mention, look at the candle, right? Look at the candle we're already seeing. Right, you're seeing an inverted hammer candle, right? A long upper wick starting to push down. So again, we have resistance up at this 268 mark, and we're starting to just reject right off of that. So I do expect this will have a red day today. A key level for it to start breaking down below would be this right here. When it gets below, what is that? Like, I don't know, I can't even see. Hold on. What level is that? That is When it gets below 267.44, we might start going down really hard because 267.44 was the high Thursday, and that's the most recent high or support level that it would be testing. So through this 267.44, 267.30 mark, we should start seeing the market come down pretty good. So what should we do? We should start watching things like TVIX. TVIX is at a low price point. So you can see it's starting to go green, right? You can see right there, it's starting to go green right down near the support level. So we're going to start watching TVIX to the long side. All right, on to the next thing is CMG. Chipotle up basically $100 over the past week. So really, really big gap up. So we're looking to get short on CMG. I would like to short it and even hold short for a swing trade. So what I mean by this is if you look back in time here, look at this gap down. So remember the earnings. So these are earnings dates, right? So if you look here, a few months back, Chipotle had earnings. They had earnings and they gapped from $3 or sorry, $340, $330 all the way down to, $270. And then they came all the way back up to fill that gap. They had earnings, they gapped down another $100. And then they came all the way back up to fill that gap. So ideally, what I'm expecting is the earnings play here, this huge gap up. I'm expecting that this will come down to fill that gap. So if I can get short here, there's a possible 100 point or $70 per share profit, So again, just going based off of history here, Chipotle seems to always fill its gap from the earnings day. Ready? This gap down came all the way back up. This gap down came all the way back up. So I would expect that this gap down is going to come all the way back down. It may not happen, but I would hope so. And if it does, it'll be a nice payday. So I will be looking to get in short on Chipotle. It may not be today. It may be tomorrow, maybe a few days from now, but it's definitely something I'm keeping a strong watch on for a short. I would buy TVIX as soon as you feel that there's confirmation that the market's going down. As soon as you can identify that you think the market's going down and volatility is increasing, I would buy TVIX at that point. Next thing is McDonald's, MCD. So MCD had earnings today, so pretty good earnings, right? So, anywho, it's up quite a bit, right? So it's up from 159 to 1. So it's up about 5 points or $5 a share right now. It's starting to top out right at 165.50. So right now you can tell yourself 165.50 is a resistance point. Something we always watch for on earnings gap ups is a sell-off out of the gates and then a dip buy. That's always my first initial go-to. On any of these gap ups that, go up really big, my first initial thought is look for a profit-taking wash when the bell opens and then a dip buy to go long. And it may not happen, but again, if it's good earnings and people want to invest in it, they'll wait for the dip buy because a lot of people from yesterday or, from a few months back, they might start selling on this big pop-up here, okay? Yes, sir. Yes, sir. Yes, sir. All right. So again, McDonald's. We'll just be watching McDonald's. It's not my favorite play, but we're going to watch it just because, well, it's had an earnings day and it's up pretty big. So that might bring in some volume and volatility. Another one I'll be watching is MU, Micron. So if you look at the daily chart, Micron had that huge red day. Micron also has support right here at this, 47.30, right? Because you can see here it had resistance a few times back there, and now those areas are holding up as support. So it kind of flip-flopped, right? So before, it had resistance on this line, right? And now we broke out, we're coming down, and now we're holding that line. Like that. So if it breaks that line, that's where I'll get short, right? If that were to break, I would want to be short biased, right? If it doesn't break and it actually holds up, then I'll want to be long biased. So again, this is something I'm watching for today. I think MU has a strong possibility of having a bit of a squeeze. Just based off of that. It's right on support, $47, $47.50. I think it's a little bit exhausted to the downside. So I think we might see a little bit of a squeeze play on MU. So I'm going to be watching MU long today. All right. And what was I going to say? What did I say? Those are primarily all the stocks that I am watching today. Again, I don't really trade DGAS ever, so I don't really know. I don't really follow it. From what I do know, though, is DGAS is a swing trading stock, obviously. It's a stock where, what's the inverse of DGAS? Is it UGAS? Is that right? Yeah, DGAS, UGAS. So let's see. If I had to do this, so DGAS, right? Isn't it? Is that what it is? Is it DGAS and UGAS are the inverse? I believe. I'm pretty sure. Let's see. Let's do 180 day. So let's look at these past couple of days. So this move up was this move down, right? Right. Yep. Okay. Gotcha. So yeah, so it's just, when you're looking at DGAS, UGAS, again, I don't play them, but it won't take me long to really understand it. So yeah, it's DGAS and UGAS. So they're both inverse. Hold on, I need to look at something here. They're both inverse related ETFs, both 3 times leveraged. That's what it looks like. Okay, so yeah. All right, anytime you think DGAS or anytime you think UGAS is going down, DGAS would go up and vice versa. Anytime you think DGAS is going down, UGAS would go up, right? So based on what I'm seeing here, I would say UGAS is probably getting pretty close to reversing and starting to head back up because UGAS has a lot of resistance or / support kind of in this $55, $56 area. So I'd say $56 area is going to be kind of a support area where UGAS may start reversing, and then you're going to see DGAS start coming down. So I don't really know, but again, I don't really follow these all the time. ETFs, yeah, but at the end of the day, I don't really follow them all the time. If you ask me, they're pretty ugly. I mean, not that you can't trade them and make money, but pretty ugly. I mean, if you look at the stock charts, I mean, all it is gap, which helps to make money. Sure, it does, for sure, but kind of ugly charts. And I'm not a fan of ugly charts. I like clean, easy to read charts. So again, these are really, I mean, this is swing trading all day. I would never day trade this probably. Let's see. Yeah, I mean, I would never day trade that. I mean, that's just an ugly chart for sure. Oh, you know what? AQMS was a stock that I looked at earlier that might have potential. I forgot to think about that one. So AQMS, if you look at the daily chart here on AQMS, you'll see that it's actually pushing up and it's starting to reverse trend. So you can always think of like trend reversal, like on penny stocks, you'll see this. This is kind of a signal that we might be going long. That's the pattern we look for right there. I'm not sure if you probably don't even know what this, I mean, at the end of the day, this right here, that's the pattern we look for stocks to start going long if they're penny stocks, because let me put it like this, right? It's almost like a U, right? How would you identify trend reversal, right? So this is a regular U, right? I'm just drawing the letter U, right? Like that's a regular U, okay? But in terms of stock trading, you can think about it like this. If a stock is downtrending, right? You're trying to figure out, well, when's the bottom and when's it going to reverse? Well, if it's not at the bottom, it will just go like this. It'll keep going down, right? And then it starts to kind of base out again. You're thinking maybe this is it, right? But if it goes like this, pop, that's when you've probably found the bottom, right? That's when you found the bottom. So let me draw it like this, right? Chances are it's going that way. If you can identify that, which is that, chances are you're going to start going long on that stock. maybe not for a long time, but that's what we look for. I hope that helps. That's what we look for. We kind of look for, and I always look at this. I refer to this as a high heel, like a woman's high heel. That's what it reminds me of when I look at a high heel. It looks like wait, how does a high heel look like? Yeah, that's kind of what it looks like a woman's high heel. Right? I mean, that doesn't look. It's a woman's high heel looks more like that, right? But that's what it reminds me of, a woman's high heel, right? And you have that higher low. So yeah, you should be watching AQMS sit alongside, like poops. Honestly, the whole merger with Sprint and T-Mobile, I could really care less about. I really don't even. It does not even faze me. You know, the only reason T-Mobile and Sprint, you know, from what I mean, I read some things, they're teaming up. I mean, Sprint's basically garbage. Like, you know, they've been on the line of almost going out of business for a long time. Now they're teaming up with T-Mobile. I mean, the merger in itself is good, but the reasons behind the merger are all for reasons of weakness, right? You know, that's the way I see it, you know. It's like, I don't know, like take Michael Jordan back in the day. Like, you know, you have Michael Jordan, the best basketball player in the world, right? And then it's like bringing two of the best college basketball players together to try and beat Michael Jordan in basketball. They're coming together for a good reason, but it's a reason only because they're not strong enough alone to do it on themselves. So they have to come together, is the way I see it. So again, right, that's the way I look at it. You know, that's the way I see it. I see it as two weaker competitors that really are of they have no other choice other than to team together to try and take them out. So yeah, it could be good long term, but for right now, I would rather wait for confirmation on whether or not it's actually a successful merger and things are going well, you know. So that's the way I see that merger, in my opinion. So anywho, so that's all I got for you guys today. So I'm going to go ahead. We're going to end it there. AMD, I wouldn't even trade AMD. AMD is, for me, is just an ugly looking stock. But that's all I got for you guys today. So for those of you that are watching, just want to let you know, today's the last day we're offering the 50% off sale to our private trading group. So again, after today, you will no longer be able to receive 50% off. The coupon code is pennystock15. I'll actually put it right here so you guys don't lose it. Okay, so that is the coupon code there for our monthly private trading course group. And yes, I'll take a look at AKS. Let's see. Yeah, no, AKS isn't really up. No. So anywho, with that being said, thank you guys once again for tuning in. The link to join our private group is the first link in the description. Again, you can get 50% off by using the coupon code pennystock15 at checkout. Today's the last day to use it. We've been running it for like 15 days now. So hopefully you guys got in before the price goes back up. So once again, thank you guys for tuning in, and I'll catch you guys all tomorrow morning for another live stream.